Hi and welcome to the Martin Bell Show. Hopefully you've been keeping well, and in today's video we're going to be talking about a news article from the Daily Mail Online from the money section, and it's about keeping cool in a time of crisis. Investment lessons from 2020 to take with you into the new year in 2021. So this article was released on the 2nd of January 21. And we're going to go through it, and I'm going to share you my thoughts and my feelings. So I actually haven't read the article yet myself, so it'll be interesting to see what it says. So currently I am still long in the markets. I haven't sold out the positions that I have any in my SIP, but I am transferring my ISA, so I have sold all them until it transfers to my new provider. So before I begin, I am not a licensed professional. This is not financial advice. This is just me sharing my thoughts and my perspective, and I'll be interested in hearing your feedback. If you enjoy this content, then please remember to smash that like button. It really helps the algorithm. So let's get straight into it. After some coffee. It's safe to say nobody could have prepared for what would happen over the past 12 months. In terms of managing their finances, but also their life in general. Thousands have lost their jobs, millions were furloughed, and sadly many have lost their lives due to the pandemic. Very true. And that is very sad that people who have lost loved ones or become in hard times because of the financial situation that they're in. And this is the reason why I've also created this channel, is to help people to gain better knowledge, to help improve their situation or their state of mind for having a better understanding of why the way things are. It may not always improve like literally the numbers in the bank account. Hopefully it will, but if people have a better understanding, they have like a clearer mind. It says here, throw into the mix the instability caused by the ongoing Brexit negotiations, which only came to conclusion on Christmas Eve, as well as the severe market turbulence, and the UK's investors have seen the most rollercoaster year since the global financial crisis. It's therefore not surprising that the asset managers, banks and investment banks are more cautious, and unusual investment outlooks shared at the end of each year are more vague than ever. Likewise, investors and savers are probably feeling more nervous about where to put their money, whether that's an investment account tied up for years in an ISA or just under the mattress. Personally, it's good to have some cash, but having a large percentage of your portfolio, as I said, this is not financial advice. For me, it would not be advisable because cash degrades over a long period of time and it can literally fall into nothing, as well as inflation will slowly eat it away. While nobody can predict what will happen in 21 will bring, here are some tips and lessons from the industry experts to help best prepare for whatever it may be. Prioritize your savings. Very good. Emma Luman Montgomery, Associate Director of Personal Investing at Fidelity International, says savers should make sure utilities and their annual ISA allowance are being ISA allowance before anything else. So basically use up your tax sheltered accounts first. So that could be your ISAs and your SIPs. But with the ISA you have a more quicker direct route to it if you do need to tap into it. Without taking a penalty like you do with the SIP. So it says here, she says at the start of 2020 life looked very different than how it looks as we head into 21. And perhaps the lessons we have all learned is that when the worst does happen, it comes out at any notice at all. That is why it's always being prepared. That is why always being as prepared as you can is essential when it comes to your financial planning. Very true. So make sure you use your annual ISA allowance. Currently, each person can save up to £20,000 into an ISA in a current tax year, enable you to build a substantial pot of money that will grow over time and won't be touched by the taxman. The current tax year ends on April the 5th and 21, so take advantage of your ISA allowance before then. Well, I would love to be able to fill up my ISA, and that's what I eventually plan to do. I would love to, for each year, one of my main goals is to fill up my ISA and my SIP each tax year, and then to max out my SIPP lifetime allowance, and then just keep pumping money into the ISA. I don't think the ISA has a lifetime allowance limit, but obviously there's a time period. You can only put so much in it because you're only going to live for so long, sadly. I know it's a bit morbid, but that is the reality of the situation. So keep cool in a time of crisis. Well, easier said than done. Will Hobbs, Chief Investment Officer at Barclays, wealth manager and investments advisors trying not to get spooked by the market reactions or sharp falls. The anticipatory nature of the capital markets often means that the worst declines happen before the real economic damage has shown up in the data, he says. Shocking and disorientating headlines blare from TVs, and it's easy to think about cutting your losses, converting your investments to cash and moving on. Well, I think eventually it will recover. There will be like some companies that will never recover and some will go bankrupt. But eventually, overall, I think it will be upwards in a positive trend. It may take a bit longer, but I'm mainly investing into ETFs and broad market ETFs, such as the FTSE 100 and other broad markets. So if it ever goes to zero, you're going to have more to worry about than just losing the money that I lost. So that'll be companies like BP are gone, Shell gone, Unilever gone, AstraZeneca gone, and like Vodafone are gone, and many other big, good, well, not all of them are good, but many companies that provide a service that we need. The reality is that while the market's descent was rapid when set against most prior equity bear markets, so too was the recovery. Your new relationship with risk. The coronavirus pandemic has thrown an entirely new spotlight on risk in the past few months. Never before have the day-to-day things like going to the supermarket, eating out, or meeting up with friends and family required the risk assessment skills we all have had developed since the start of the year. I don't think everyone has developed some of them risk assessments. I think a lot of people are flouting the rules, or people are getting fed up with it now. But people should just persevere, and I think we will push through to the end of it, and we will get through with it at the end. So, as Emma Lou highlights, we are all now probably getting much better at analysing risk and deciding how to manage it without even realising it, something that could come in handy in other areas of life. She adds, when it comes to investing, risk is a word that tends to loom large. How many times have you heard someone say, "Oh, investing is too risky for me," or "I don't like to take any risk with my money"? We cannot eliminate risk altogether, investing or in life. We all know that, but learning to assess the level of risk you need to take, balancing those risks against the potential rewards available to you, whilst you stand in good stead to reach your financial goals. Very good. So the next one is about saving a cash buffer, and this is very good to build up an emergency cash fund. Some people say 3 to 6 months, and if you're in the FIRE community, it'll be pushed out even further to 6 to 12 months, and some people even have a larger cash position in that as well. Hayley Millhouse of financial advice platform Open Money says that cash buffer is especially important should you lose your job or put you on a program like the government's furlough scheme this year. And this enables you to relax a little bit more, as it gives you more time to find a new job, and it doesn't make you panic and pick whatever is given to you. So you can be a little bit more selective, but there's going to be a lot of competition for jobs at this moment in time if people are looking for new work, as there's a lot of unemployment at this moment in time. As a rough guide, I would recommend a cash buffer of 3 months. There you go. Some say he says 3 months, some people say 3 to 6. And as I said, in the FIRE community, they go for 6 to 12 months and onwards outlooking. You've got to find out what's best for you. But as I said, I'm not a licensed advisor. This is just me sharing my thoughts and my feelings. Outgoings kept in accessible savings, but for many people this may not be realistic given current circumstances. Save what you can, she says. You may have already had a cash buffer and you had to dip in during the pandemic. Now is the time to replenish it. Draw up a new list of all your income and outgoings and start afresh in 21. Right. Human intervention will always win. One of the few reassurances that can be taken from this crisis is the ability of human innovation. Within the stock market, this is often conflated with the technology or related stocks, and for a good reason. High year-to-date returns for this cohorts of stocks pay homage to the forced acceleration of digital innovation and adaptation. Will says the lesson here for investors is that the bar for betting against the human innovation should be extremely high. He adds, you only need to look at the incredible race into a lake to locate the distribute and vaccine for evidence of this. Make looking after you your priority. So this is very important, to look after your physical well-being, your mental health well-being, your financial well-being, and your environmental well-being, and your physical environmental well-being, such as your home. And that can really have a positive on your physical well-being and mental state of mind. Having adequate pension savings is essential as we're living longer and in retirement, says Emmylou. This is very true. I have made a video, and it should have been released the time this video is made and you get to see it, that not enough people are actually investing into their pensions and not having enough money for retirement. And that's especially the case for women who tend to live longer on average, and yet so often let a regular pension savings slide when they take a break to have a baby or to find one is on them to care for an elderly relative. Putting your hard-earned money to work and keeping it working hard is essentially for your retirement success. If you're already save the maximum you want to through your employer's workplace pension scheme or you're self-employed, then in addition you can consider saving into a SIP, which I am. And if you check out my other playlist, I am going to be making more videos on my SIP and my investments into my SIP. But I'm thinking I'm going to add in more position into my ISA at this moment in time, because at the moment you can't access a SIP without taking a penalty. And if anything happens, you can access the ISA if you need to. It's not ideal, but then again, it's there if you need to. So it's good to build it up a little bit and then maybe move towards a SIP. That's something I may do, but I may change my mind. But I think I won't. But I'll keep you updated anyway. So if you're self-employed and have a limited company, consider making contributions from your limited company. These will be considered employee contributions and can usually be offset as a business expense, which will reduce your potential corporation tax liability. However, unlike personal contributions, employer contributions do not attract tax relief. Because at the moment with my SIP, if I put in, they put in 20% of whatever I put in. So if I wanted to put in £100, I could put 80 in and they can put in the 20. But what I do is I put my 100 in and then they put the rest, the other chunk in. So I was going to put 100 in. I'm going to put 100 in. I'm not going to say put 80 in, so they put the 20 in to make it 100. I just put my 100 in and they give me the top up of whatever that would be. So events that shape markets but expect the unexpected. Looking back at the outlooks from this time last year, 2020 was supposed to be a year where US elections, trade tensions and Brexit were dominating market forces. While all these themes did impact the markets, it was a scratch compared to the impact of the pandemic. We'll say, so the lesson here is in life and investing is unpredictable at the best of times, and while we could rattle off numbers of watch outs for 21, it's often better to stick your investing strategy and do not attempt to time in the markets. This is also a good saying. It's called keep it simple, or the other one is, I don't know if it's keep it simple stupid. That's the other one as well. When I was growing up, that was what it was called, but now it's probably just called keep it simple. Managing a number of different ISAs, Saving pots and pensions can make keeping track of how your investments are going, whether you're on your track with your goals, more difficult. Emma Lou says it is therefore better to consolidate your savings and investments where it's appropriate. She adds, for instance, if you have a number of small pension pots from previous employers, it may be an idea to consider these into a SIP. Well, I have a workplace pension, and I have my SIP, and I also have a state pension if it exists when I'm older. So I should have a good amount of money coming in my retirement years. I don't plan to ever fully retire, but maybe to dial it back or do some things that I enjoy more than my current. Well, I do enjoy my current work, but I could do more what I really want, if that makes sense. Anyway, so it says here, there you can also be penalties for transferring a pension. Oh yes. Talk about our financial concerns. Money can all too often be a taboo subject with family and friends, but talking about it openly and honestly and discussing concerns that may have arisen during the pandemic will help you gain a fresh financial perspective and support for your future. Haley adds, an unified effort to boost your finances is often the best way forward. If and when the time comes, you may want to seek professional advice to achieve your financial goals too. So yes, it's very important to write down your goals, and they have to be realistic, and in setting hard goals and breaking them down and setting a realistic time period to achieving them goals. Otherwise, you're setting goals for yourself to fail, so you never actually have to really try. Experts at online trading platform IG expect an almost exact reversal in performance from the sectors that have performed best during the pandemic, and we head into 21. As we get better and the recovery things, other ones will do better. Energy will get go back up again, such as oil, because people will start to travel more. Leisure and tourism will come back. More people will have to go back to work. Real estate will eventually recover. Financials recover, and utilities will also recover. So having a balanced portfolio is very, very important. As I said, I don't have one at the moment because I've just started to grow my SIP, and I'm obviously transferring my ISA to a different company. So that will be addressed in later videos. So figures from the investment groups shown a strong negative correlation between the stocks that performed well during the lockdowns and those that performed well on the news on the potential vaccine. For example, energy lost 35.4% during lockdowns, but gained. So yeah, that was a massive good opportunity to bulk buy or buy a good position into that sector. Because if it ever did go to zero, that would be the end of the world, basically. Because sadly, we do live in a world that's dominated by oil. A lot of the items that you buy, plastic, such as the keyboard you're typing on, it's probably made from oil. Your clothing that you wear, you get into work. If you don't have an electric car, it's run by petrol. So we are still running the world that is by oil. I'm not a massive fan of oil. I would like renewables to be a bigger percentage than oil, but I understand that that's going to take some time and it's not realistic, and I'm not saying it's going to happen overnight, but I'll be glad when it does eventually happen. And then we also start clearing up our rubbish and being better at recycling, and that will be much better and cool. At the end of the lockdown, and a strong economic rebound might lift bank stocks, while have been notable and underperformers as consumers and companies borrow more. But the problem here will be continued low interest rates would be that has crippled banks' profitability and continue to hold the sector back. So okay, that's just an interesting one. I think by one of these people, I just wanted to read to you. It's like a perspective I see quite a lot in the general outer world and on the online world and in the comments section. And when I read quite a lot of newspapers, the comments section box below. Quite a lot of people have this kind of mindset. It says here, I'd like these experts to advise how someone on the minimum wage and a 0-hour contract can save up to £20,000 per annum in an ISA. Fair enough question, but then it says here, it's the reality of the situation, and I can't even put the full £20,000 in per annum myself, because that would be more than my income. But eventually I would like to be able to put the full £20,000 in per annum and still have money to live on. It says here, don't contact these people in any way, shape or form, please. It says here, you can't. You need to get yourself a better job and then you can worry about investing. And that is the reality of the truth. And then the person says here, breaking news. Other people have different financial circumstances. Articles on here are not tailored specifically just for you. So that is, I do notice that quite a lot as a mindset of people. I'm not saying it's everyone, but I do notice it quite a bit. So if you've enjoyed this content and you want to see more, then please feel free to subscribe to me. And if you click the bell notification button, you get notified when I next release a video. I'm going to be trying to make daily content of news and me playing some chilled video games. Sometimes we talk about investing in the game, or sometimes it's just a video game. Also, I do live stream where I'll be live streaming me playing some Minecraft and other games, as well as making content of my investment portfolios. So thank you for watching, take care, hopefully you have a good day, and I'll see you all soon.